This is Mr. Cosmic at the Cosmic Training Academy, and today I just wanted to give you guys some examples because I received a little email, I guess you want to say message, direct message, where people are saying, well, man, I don't really have a lot of money and I really want to practice options, so should I do paper trading? And I'm like, well, the thing about paper trading is that you don't really get a grasp of it if you're paper trading. In my opinion, that's just my opinion. And I'm not here to give financial advice. I'm just here to give examples of how you can, trade the markets. I'm not a financial advisor. I just give, opinions and information. So educational purposes only. Cosmic Trading Academy, and I'm going to show you guys and I'm gonna give you, and just to let you know, I haven't even done this yet, so I want to show you real time, basically, how to do it for a cheaper price. Okay, so here, this broker is Robinhood. Robinhood is one of the favorites because many people don't want to pay the fees associated with trading on other platforms because in some other platforms it's $1 to get into an option, $1 to get out, or 65 cents on certain platforms to get in and 65 cents to close it. And so whereas Robinhood doesn't do that, but you have to keep in mind Robinhood has spreads, and their spreads with where they might make more money off of you than even those $65 commission payments that you have to pay the broker. So just keep that in mind. The only way you can know is do the exact same trade from Robinhood in another broker, and you will see whether they're taking more money from you or not, which one is better. So that's up to you as a trader. You have to decide. Sometimes people like it for the platform. Okay, moving along here. Now, so you say you don't have a lot of money, so I'm going to show you a strategy to do. Now, keep in mind, the lower the money, anytime you're dealing with trading, the lower the money, the lower the probability. The lower the probability, then you already know what it is. Okay, so trading options right there. Okay, and so then what we're going to do now, Robinhood has this beautiful system where they helping you to learn about options. Today is April, I think it's 8th. No, today is April 9th. So tomorrow is going to be April 10th. And again, the market's not even open. Today is on a Sunday. So, and these do it every, on QQQ, which is basically like tech. Um, so QQQ does the expiration every day. So that's what's kind of cool about QQQ. They're doing expirations every day, you see? So you can keep that in mind. Um, Now, first thing we're going to do is we start off, you got to think, what do you think QQQ is going to do, right? Do you think QQQ is going to range? Look at the range of QQQ. This is what I always suggest people do. Always know your range. Let's see, there's your lows. Take in consideration, where's your lows at? Right there. Where's your highs at? Right here. This is on the 1 day chart, okay? And so then let's take in consideration on the 1 week. I like to take the 1 week because if we're going to do a trade that's only going to be for the next day, then we need to be able to know at least a few days. Okay? It wouldn't be a video if I didn't yawn. So you guys already know. Now let's just see. If we plan on, like, the cool thing about this is that if you open and close these fast, you might have a better chance to make profit. So here's another example right here. That's your high, that's your low, right? Okay, so let's look at the highs and lows. Highs is 321, lows in the last week is 313. Keep that in your mind. 321 and 313, right? So somewhere in the middle is probably where we're at right now, like 317. This is a really good one. 321, 313, 317 is right in the middle. Okay, so we're right there. So let's go trade some options. Here we go. Now let's just go to, I'm gonna give it one extra day, okay? Because I'm not gonna go too far out because we don't want to get hit with time decay. Time decay is when your option on the buys is losing on theta. Theta means that the more time that you're in that option trade, the more money you're losing. So, and if you want to see an example of what theta is, you come down and you look and you will see theta right here. And that's 33. So you know that every day that passes, it's going to be costing you 33. So keep that in mind, okay? So that's when you're buying an option. Just remember, when you're a seller of options, theta is in your favor because the other person is losing money. But when you're buying options, theta is not in your favor. You're losing money every day that passes by, okay? All right, so here we go. So first we're going to start off. We said that 317 is about the middle point. So what I'm going to do is I'm going to buy I'm gonna buy 2 puts. Actually, I'm gonna sell two puts here, right? And then I'm gonna buy 1 put and buy another put. So this is like a butterfly spread. Okay. So then now we're gonna go look at the option. We're gonna edit the ratio. Okay. So this is editing the ratio. That means because in order for this to even out, we have to sell at least 2 of these. The ones that we're selling, we have to sell at least 2 because if we don't, because we have 2 other ones, 1 and 2. So we have to make sure that we sell at least 2 to make the money even out. Okay. All right. So check it out. We're gonna edit the ratio on the one that we sold. Okay, now put that as 2. Okay, continue that, right? All right, cool. Now it says the maximum cost is going to cost us about $6. Now, so that's $6 is going to cost you. So you don't have any excuse to be saying, oh man, I can't really trade options. I don't have enough money. Here's QQQ, one of the most liquid assets that you could be trading. So it's going to move like, pretty good or whatever in terms of how much volume it has. And so you don't have a reason to say, oh, I have to trade some penny stocks. No, you don't. So here's an example. Oh, you can trading something with high liquidity, high volume, and it doesn't cost you a lot with this strategy. Okay. So look how much you can make if you watch and you pay attention. You can make up to $94. And if you really look at the maximum loss, it's already set, $6. You can't say that, oh man, well, I couldn't make no money. Well, yes, you could, because there it is. But keep in mind, it's really gonna be really, really hard. Look how much space you got. You have to make in between here and here to make that money. That's your room. That's all the room you got. You know what I'm saying? So you cannot be here. You cannot be here. You're going to lose. You're going to lose your $6, even though that ain't much. Imagine if you put this on every day, sure, you could have at least 10 days of loss, and then make 1 day of win, and you will make probably $30. You see what I'm saying? As an example, you could lose 10 days straight and win 1 day, and you'll still make the difference will be $34, give or take, right? So just think about that. As long as your ego and your psychology is right, you don't really have to. You could do this every single day, and then just, hey, if it hit, it hit. But you have to pay attention now. The thing about something like this is when it moves into when the strategy moves into this area, you have to be gone. You got to watch this. So as soon as you see it getting real close, to me, I would be gone at 50. If I knew that the chance of profit is up to 94, I would cut that in half. I would subtract $6, which will put you at 88, and then cut that in half, which will put you at around 44. I'd be gone right there at 44. I'd be gone. Forget about 75%, forget about 85%. It's my opinion. I'll be gone at 50%. If you get it to get right here at 44, 45, anywhere right there, go. Boom. Man, that's big X. That's big X, on your on profit. So if you make $44 off a $6 trade, come on, man. Come on. 30 something dollars. And imagine if you're doing that every day, even if you took it at $26 every day, and then subtract your $6 that it cost you to get in the trade and kept your 20. If you did that every day, you would make $100 a week on a small little trade. Imagine that. $100 a week. You're obviously not gonna hit every time. But if you could just, because the thing about it is get in and get out really fast. If it hit for 16, go. Shoot. The problem is people stay too long. So that's that. And then you take a look at that, and as you can see, again, limit price. We're gonna pay $6. We're only gonna do one of them, and then that's what it looks like right there. So, and I'll probably just do one real time tomorrow, just to give an example. But that's actually, I might even put this one on. I don't think it's gonna let me cue it, but we'll see if it does. I really shouldn't. Wow, I killed it. Anyway, we'll see. It's only $6, so we'll see what happens. Main thing is knowing how to get out of these kind of trades. See, these three option orders, this is one thing that people must practice before you do it. Practice getting out of these three option orders, because when I tell you sometimes these are really hard to get out of for some strange reason. Other people will say, "Oh no, it ain't hard, man. This really okay." Well, I mean, again, out of all the other options that I trade on here, um, three option orders are typically some of the most difficult for me to get out. So, I mean, if there's people, comment below if you think that it's sweeter, easier, or whatever you think. And if you have a system that makes you be able to close it right away every time, please add it in the comment section. Anyway, guys, I hope that helps you guys with a cheap option strategy to get in for low, people who don't have a lot of money. If you only have maybe $20, $30 to be able to invest in options a week to try it out, or $25, there's your option strategy. I wish you guys all the best of luck. This is Mr. Cosmic. This is the Cosmic Trading Academy, where we train, travel, trade, and I'll catch you guys on the other side. Peace.